Oliver Sloup with Blue Line Futures has joined us here over the phone. Obviously doing a little bit of work from an isolated area, Oliver. Want you to set things up here, and I know that there's a lot of variables. We've had many traders talk to us about all of the variables, what could happen, what could go wrong. Can you kind of break this down for our audience just a little bit? And going forward from here, set up a best case scenario and maybe a worst case scenario for this grain market. That way it'll give some of these producers an idea of how to manage some of this risk going forward.
Yeah, absolutely. And it's a very fluid situation, and we're starting to get some of the economic data, and we're going to continue to see that here over the coming weeks. This morning's jobless claims were up significantly, which was to be expected, and it was actually kind of comforting to see the outside markets rally on the back of that. Right now, the S&P is up about 4%. Prior to that release, we were down about 2.25%. So we're about 6.5% off of those lows on the back of a dreadful number. And part of that kind of signals to me that potentially a lot of the bad news is being priced into the market, and that leads some upward mobility, especially with funds positioned the way that they are right now. Now, for corn, obviously there's a little bit more of a headwind there with the ethanol issues and staring down next week's crop report, where we're looking at potentially a boatload of acres. So I think rallies will probably be sold into. But if we do get another relief rally here for corn, another 50 to 20 cents, I think producers are going to want to be proactive in taking advantage of that and hedging some risk. For that May corn contract, 363 to 365 is going to be a significant area for us. This was previous support and the breakdown point from March 16th. If we can achieve consecutive closes out above here, potentially that neutralizes things. But until we see that, the bears do have full control of the technical chart here.
What about the wheat market then? You know, that's a market that really has been kind of on a rally here this week if you compare it to where we were even 3 weeks ago.
A huge rally. I mean, we have basically erased all the losses over the last 2 months. Over the course, we've got those losses back in the course of a week and a half, and we came right up against those highs in that Chicago contract, 590 3/4, just a stone throw short of that. And are coming off a little bit more, but right now this reversal is encouraging for the bull camp, and I think there could be some more, room to the upside. The level that we're looking at for support, 530 to 540, it seems a ways away, but we have had a big run, so I think if pullback down to that area would be healthy for the market. In between that 10-cent gap, you've got the 50, the 100, and 200-day moving average, as well as the 50% retracement. So a lot of good technical support. The bulls are now in control here on the wheat chart so long as they can defend that pocket.
Okay, Oliver, I want you to stay right there because we're going to ask that exact same question when we talk about the livestock straight ahead and have you explain that to our audience as well here on the Market Day Report.